Welcome to amazing session of financial planning, episode number 9. This is Mahesh Kathiravan, your debt freedom coach, welcoming you yet another episode of financial planning. And in today's episode is amazing, interesting client of mine whom I reviewed like 6 to 7 months back, and I got a very good insight the way he structured his financial planning, the financial goals and everything. I really got very much interested, and that's why I thought that let's bring it to you to in this episode. Before moving ahead, three things. The first thing is that a big disclaimer: I am a qualified personal finance professional, so I help people in understanding and making them planning the finances and everything. But this video is an education video, so you don't take any financial advices or actions based on this video. This is an education because the portfolios, the mutual fund schemes, or the goals which I am sharing is all been changed due to my agreement with my client. So what I am showing might be the past data, past performance. So always remember, past performance doesn't predict or doesn't give you guarantee that you will get returns in current time, right? So this is what I wanted to share with the first thing. Second thing, if you're a new subscriber, please like and subscribe, click on the bell icon, you will get all the informations. And third thing, do comment what you learned from this video, because that is more important, because I created this series to make you independent. Do it yourself as a financial planner, because financial planning is not that difficult. It's very easy, super duper easy. It's just you need to know some mechanism which I'm sharing, which I will always sharing in this financial episodes, so that you can understand how well you can plan your finances. But yes, if else you want to take an advice and everything, don't worry. You can always approach your certified financial professional, QPFP. Always they're there to help you. Okay, great. So let's move on to today's interesting topic. And today is all about shift to fixed income and watch your wealth stabilize. Now, this is very great if your portfolio is underperforming to the laggard funds. Now, what is laggard? This is very a single term. It's always used in the context of finance and investing world. Okay, so laggard refers to a stock, security, or company that consistently underperforms compared to its peers or relevant benchmark. So, for example, if a Nifty 50 is there, okay, and it's a particular stock, if you're referring to that, now it always be a very laggard kind of thing, because it is giving you performance which is lower than the average return either through its benchmark and everything. Okay, so mutual funds also have a benchmark, so mutual fund schemes are also mapped to that benchmark. Okay, so if else they find a difficulty in that, so they are called as a laggard funds. Okay, it's simple as that. So laggard funds can drag down your overall returns, eroding your wealth over time. That is more important, because what happens is that while we don't do a mutual fund portfolio regularly basis, the problem is that these funds always come and really impacts our life a lot. Now, when we have a certain goals and financial goals in one life, what happens in that process? It just makes your life hell, right? That's what happens. So by shifting to fixed income options, you can protect your capital, enjoy stable returns, reduce market volatility. Okay, FI investments can, such as bonds or debt funds, offer a predictable income and greater security, so which help you grow your wealth steadily without the stress of market swings, right? So that's the major thing about this thing, right? But this is what exactly is all about. But let me come back to this topic, why I'm talking about these things in today's episode. See, because this particular client, what happened in that, even investing for equity funds and stocks for the past 5 to 6 years, but what has happened in that, he was not able to monitor the funds a lot. Now, in that process, it has happened a lot. So because of that, you always get a fear that whether it is happen, it is will not happen, and the returns will come or not. And that's always been a greater perspective. So today I will be showing you what exactly this client have done, and what I have given him the suggestion, how I helped him is personal finance. Okay, so let's get it done. Okay, so what are the findings which I found out, and then what advice I given him to, you can just see. His name is Ritvik. Okay, and I will be sharing with you his goals as well. So what are our goals? He is only three goals he have now. He doesn't want to get married, and this is very peculiar case. That's what I'm saying. Personal finance is personal. So in case your brother, sister, father, mother, blood relations, your cousin, sister, everywhere the personal finance is different. So they don't think as what you think. So it is always a separate thing which you need to always care. Now, if you see, he wanted to buy land and then build house. There's two important goals. But why I combined is because I wanted to calculate the same thing, because building house also consists into that. Then you have a retirement goal and a charity. So charity is around 3 lakhs, 3 crores he wanted to give as a charity. But like I said, he's an unmarried guy. He doesn't want to get married, and that's why this all things are coming. So what has been there? He has been investing equity fund a lot and stocks for the past 5 years. This is what I've been observing. He started with ELSS funds and moved to open scheme. So when I talked about and when discussed with him, like I straight away didn't don't jump into any financial planning of the or any of my clients. I just start with the story why they wanted to, because why is more important, right? Because rest of the things are technical skills. 20% is technical, the 80% is mindset when it comes to your financial planning. High investments and aggressive allocations have helped build a sizable corpus. That was very good. Invest in good performing funds, but doesn't review his profile. That's what made his problem. So when I said that he didn't review his profile because he was having a lagged fund, that was made him problem. It has chronic laggards and overlapping schemes. So a lot of schemes will overlap. This is very common if you see a lot of financial episodes I have done. You can always see a lot of clients have overlapped their schemes. He should get rid of the poor performance and consolidate the portfolio. Portfolio is skewed toward the small cap and mid cap firms. Should cut exposure. It has a too much equity in portfolio. Okay, should invest in the fixed income as well as for the stability. Also should reduce. He should also reduce the PF contribution. Invest in the PPF. So PF is provident fund and PPF is public provident fund. So there's a lot of difference in that. Okay, now what I said, the goal targets are very high. So if you see the goal targets, it's around 7 crores, 5 crores, 90 point, and the future value of it is 27 crores, 8 lakhs 77,912, 30 crores to 28,800. So it's little bit high. SIPs have to be hiked by 5% every year. So previously I used to tell about 5 to 5%, but now it is 10%. 10%. Okay. Should consider NPS, investing in NPS to reduce the tax liability. Doesn't need life insurance because he's not going to marry. Should review the investments and rebalance at least once a year. So at least once a year, if he's with me, he can always come back and rebalance. That's the one thing. Should reduce the risk when goal is near so that he doesn't miss the target. So this is how the things are going. Now, if you talk about the assumptions, so these are the assumptions which I always take. Education and inflation is 10%, equity fund returns at 10%, debt fund 7%, of all other goes 10%. Now, someone might not agree that why I did not put 12% or 16%, 18%. Say, I wanted to give a more of realistic figures to my clients, because the way when 12%, 16% is there, that's okay. I always say that there's a given example of this cake. You have a chocolate base of cake, and outside they have that baker has done with cream. So what you would have first, the cream or the chocolate cake? You will always have obviously the cream. Okay, then you go for the chocolate. What it means that the first thing what you get is a bonus, that is an added bonus, that is a 2%, 6%, or 8%. But the rest of the things is you have to deal with it. That's why I did not give you the cream, I gave you only the chocolate, which is very good to eat. Okay, this is kind of the dark chocolate. Okay, let's understand what is the existing portfolios are there. If you're ready, type ready in the chat box, comment box. Let me see you're ready for this. Okay, great. So if you see Ritvik has a lot of funds. Now, like I said, overlapping is done. I will share with you where it is being going on. Okay, so first is Parag Parekh Flexi Cup. He's having around 10 lakhs 15,000. We have 2 lakhs 18,000, so 20,000 is 5 lakhs 63,000. But if you see a lot of ALS he have, but very less. Mid cap is around 1 lakh. DSP mid cap is 3 lakhs. Nippon ELS is 6949. Quant small cap is 2 lakh. Quant mid cap is 4 lakh 30,000, and he's invested 20,000 in each of this mutual funds. When I talk about the small cap, it's around 7 lakhs 8,000 to 80. Prudential is a new fund which I told. I will tell you why it is there. Tata Equity, private equity is there, 16 lakhs 53,000. Quant Absolute is 1 lakh 85. Now these are all very old funds if you see. Motilal was on Nasdaq. This is a FOF, this fund of funds. That means it invests in the Nasdaq side. 2,40,334. Navy Nasdaq is around 25,000. ICICI Prudential Bharat 22 FOF is 2,05,000. 76 is 1,959. Stock investments around 36 lakhs 45,000. Provident fund is 77 lakhs 20,000. 3 lakhs 7,000, 1 lakh 66,000, and 2 lakh 80. So around Motamoti, if you see, is 1 crore 84,045 31919 is a total portfolio. Yes, investment. What is the existing SIP? Around 2 lakh 62,332. Yes, invested. Okay, this is how things are going. Now, what I meant for that is that now if you see this fund, Parag Palik Flexi Cap, both funds have fund very well. This Parag Parag and SDC, but they. So what I suggest, I continue the SIP, increase the amount by another 10%. So I again made it by another 20,000. I've told him to make it, so that it will be very easy for him to reach his goals. Okay. Now, like I said, again a disclaimer: please don't go by these fund names and invest directly blindly. Please ask your mutual fund advisor or see the rolling returns of past 5 years or 3 years, and then come to a conclusion whether this fund is good or not. And a lot of parameters there as per your risk profile and everything. So don't go blindly by what I am sharing with you. Okay, this is very old data, and this is nothing. This thing just to show you how you can review your portfolio. If you see Axis ELS, tax saver, and mid cap DSP mid cap, if you see these funds have underperformed for several years. So when I evaluated that funds were what not good. So what I said, I told them to shift to balance and dividends fund. Now, if you see, this is the trick, what I told you, this is the hack which you need to learn in personal finance. The moment when you don't have new money, what you can do, you can existing funds, you can just close it, which is not going good, and take that SIP and put it in the existing system which is doing good. What happens in that process is that you are not only making this funds grow, also by which you're also increasing the other funds growth as well. So in a way, you're amplifying the power of compounding. That's more important. Okay. The con small cap, if you see, I have told him to put small cap and mid caps are down, but this funds, yes, small cap, if you see, is bit down. So okay, but these funds are going good. So continue to XIP and hike it by 10%. That's all. Yes, I told him this. This is a thematic fund. Thematic fund is very dangerous at this age for him. So what I told him, that you go to a diversified scheme of ICICI Prudential Blue Chip for. This is what I told him to do. That is a new fund. So for him, okay, start SIP in this thing. Okay, so whatever this is there, no, he will automatically slip into this. So that's very good again. Tata Equity, this value fund is very good. This is a value fund. Yes, you can restart because you stopped SIP. So I told him to restart and hike it by 10% every year. Okay. Now, Quant Absolute is a very bad fund because this is hit by downturn. So what I told him, that switch to ICICI Prudential Bharat FOI for stable return, and that will be also, and again continue the for stable portfolios and everything. Motilal Navy Asnag is very good control owning Ocus funds. Now there is a bit concern with his Nasdaq this thing Motilal. So please confirm your if you are going for Motilal, please take care whether Motilal Oswal is allowing you to take new funds or not that you take. ICICI Prudential, like I said, is continuing. Shift to Prudential, ICICI Prudential. Okay, this is also there. Review the portfolio of stock investments. So if they say 36 lakhs 45,500 there, review the portfolio regularly. Consider moving to mutual fund for stable returns. 36 lakhs is a big amount for him for at this age, at this goals he has mentioned. So I suggested that review that portfolio regularly and continue to moving into this. Provident fund, he has around this thing. So I told him to reduce by 12,000 around, and 12,000 he can invest in the public provident fund, which is very good for him. Because if you see, the retirement goal is very high. See, it's around 5 crores 92 lakhs. So it's coming around 30 crores. So it's very, very, very important that he need to start a retirement fund as well, where he can go. Nippon India small cap is very good. Continue the SIP and hike it by 5%. I sold only 5% because this small cap is bit good because already invested in some of the small caps. Micro cap is very, very volatile. I told him to shift to large cap. So for this 40,000 will go in this 30,000 of this. Mira asset, I told him to stop. Switch the corpus to Nippon India large cap. So this 2,82,000 will go to large cap, and that will consolidate. So these are the recommendation of 2,62,500. So if you see, the difference is only about approximately 168 rupees, which you see. So I never told him to make any additional new amount. I just revamped and changed his portfolio. Okay, so this is how you can change your portfolio and review your portfolio in case if you want to know how to manage your finances. Okay, so this is it. This is what I wanted to share in this episode. So if you like, do comment what you liked about this video, which section you wanted more information, more clarity. You can always let me know. And if you I'm doing a one-to-one sessions with those who are getting in debt, or you are already in debt, you want to get out of debt, let me know. I am your debt freedom coach, so I will can always help you in that. And you can also buy my book on debt freedom that is available in Amazon as well, Kindle version. You can always go and buy that book as well. Okay, I will put that link as well. You can go and buy that. Okay, so all the best. See you for the next episode of financial planning. Hope this episode will be very, very good for you and very value added and education for you. Let's make it happen. Thank you so much and happy financial planning.